It's widely known that a limited company is the most tax efficient way to contract, but there are some areas that you need to consider to decide whether that decision is right for you. The first and most important one is contract rate. Typically, a limited company, you'll start to see the real efficiencies if you're on a contract rate of £20 an hour or £150 at an equivalent day rate. The second point to consider is the length of your contract. The majority of our clients have a 6-month contract or longer. If you've got a 3-month contract, or you see contracting as a stopgap between permanent roles, then a limited company might not necessarily be the right choice for you. 6 months and above gives you the efficiency of a limited company, and you really get to see those benefits. The third factor is the additional paperwork or administrative responsibilities that you might have to take on. Now you can, with some proactive accountants such as Pinnacle, delegate the majority of the admin out to your accountant. However, you still need to consider whether you're comfortable submitting invoices, preparing expense records and sending your books and records in on a quarterly basis. Other payment solutions are more simple and more straightforward, so there is an additional responsibility with a limited company which you may want to consider before making the choice. The next thing to think about is start date. If your contract starts in the next few days and you need to get paid quickly, then the umbrella solution or another alternative might be right for you. Limited company can take 2 to 3 weeks to set up, so if you can wait that time to raise your first invoice, then limited company might be the right choice for you. And finally is a piece of legislation called IR35. As we know, running a limited company is the most tax efficient way to contract. You might ask why everybody who has a contract doesn't operate a limited company. And the reason for this is the IR35. HMRC use IR35 to protect against disguised employment. If you're outside the scope of IR35, then limited company is potentially the right choice. If you're inside the scope, then it's something you need to investigate in a bit more detail. So to summarise, if your contract has a rate of £20 an hour or £150 a day, if your contract is for 6 months or for a longer period, if you're comfortable with the paperwork and the responsibilities of being a limited company director, if your contract is due to start in the next couple of weeks, and you feel that the contract role that you do or undertake is outside the scope of IR35, then limited company might be the right choice for you.